Angelo, and on today's show, we have Mr. Leo Zhang from Iterative Capital, Head of Research. Leo, how you doing?
Good, good. Thanks for having me.
Of course, of course. So let's get right into it. Let's talk about your background and intro into the CC space.
Yeah, so I was born and raised in China. I came to the States for college in 2010. I studied mathematics. I first came across Bitcoin in 2012 when I was interning at Sequoia Capital China. Some of the folks there were talking about Bitcoin as a very novel concept at that time. I didn't pay too much attention at that time, but it definitely left a very strong impression with me. In 2014, I started researching about this concept more and started learning about how it works and start realizing what kind of application it has. After college, I joined Morgan Stanley in structured equity derivatives. And the more I learned about how traditional financial system worked, the more disheartened and discouraged I became. I started going to meetups in New York more and talk to like-minded people. In 2016, it became very clear to me that this is a career path I want to pursue for a very long time, if not for the rest of my life. I met Chris Denon, one of the co-founders of Iterative Capital, through a friend, and the conversation immediately became, how do we work together? How do we build something meaningful in cryptocurrency space? So I joined the company as the first employee, the third member of the team, and the company has been growing ever since.
Interesting. So that leads into my next question. What is Iterative?
So Iterative started in 2015, first as a venture capital fund, just like most of the current funds that deploy in the cryptocurrency space. In 2016, 2017, the two founders realized that, okay, there's something changing profoundly with this token phenomenon. So it pivoted and started to investing in some of the tokens. So 2017 was pretty excellent. And the fund delivered excellent return, but also at that time realized this ICO phenomenon is definitely not sustainable, and there's something inherently deeply wrong about it. So in 2017, we closed the fund at the peak, pretty much returned about 13x to investors, and started a second fund in 2018. So the second fund is more focused on, pretty much solely focused on mining. We purchase mining equipment directly from manufacturers. We build our own pool, and we deploy the machines and monitor them ourselves, and we manage the rewards ourselves. So in addition to Iterative Fund, we also operate a OTC desk based in New Jersey. And this OTC is a crypto-focused wholesale dealer. And in addition to these businesses, we have an application called Asher. So Asher is a set of SDK that's connected to our OTC API, and open source wallet developers or Lightning service providers can grab this and integrate into their applications directly and offer our OTC liquidity directly in their service.
Circling back to mining a bit, Leo, why is mining important and what problem does it solve?
Yeah, so the way we see cryptocurrency, right? It's a global remittance network, and the foundation to this alternative financial system is in proof of work. And what proof of work really does is that it provides settlement assurance to this very eerie, decentralized new organism. And in order for any business to build upon it and to have the strong assurance that this doesn't, my transaction doesn't change after a few seconds or after a couple days or even after a couple years, is that I have to um, I have to have some kind of mechanism that guarantees or at least I understand that this effect cannot go away. So traditionally with FatWire, right? This settlement assurance is guaranteed by all the charter banks. And you have to have faith in the system, and banks tell you, okay, the transaction has gone through, and you have to trust the bank that the transaction has gone through. But here, with a financial system like Bitcoin or any kind of proof of work network that has sufficient amount of hash rate, um, I mean, and just a little bit more on that. I don't think just simply having hash rate is enough. It must have sufficient hash rate and the hash rate has to be uh, stubborn enough to stay on the network. for a long period, for enough period of time. And so we see, proof of work as the foundation to this kind of system, and mining is the critical piece. And just a little more on this flat wire analogy, right? All the economic activities that happen on this network, ultimately these transaction fee, all the economic value, they accrue on the settlement layer, right? So the applications on this stack above, whether it's Venmo or any kind of payroll services, they charge a certain fee, but ultimately the average user or average businesses don't have access to this economics that accrued on the settlement layer. But with proof of work, it's different. If you start mining machine, if you can anybody can just buy machines and start a farm and start getting a share of that economic benefits that accrue on the network.
That may have been true like in 2013. I don't think it's true now.
Not anybody. Well, it's getting more expensive. It's getting more expensive, that's for sure. But it's still not as expensive as being a shareholder of a fat charter bank. I mean, a majority shareholder. Yeah. So I think this kind of activities, they do get expensive, and that's just nature of this thing becoming more attractive. But still, in comparison, the kind of requirement and regulation and the kind of basically all the hurdles that you have to go through to become a shareholder class of the fat wire settlement system, this is still a huge improvement.
Yeah, I agree. What are some of the drivers and challenges of mining that people may not be aware of?
So, like you said, before 2013, 2012, even I'd argue, mining is mostly hobbyists, and anyone with a computer or even GPU rig can just start mining. So mining is definitely getting more competitive, and it's getting more industrialized. So more mining activities are moving out of people's garage and moving into these very specifically tailored data centers. The kind of power rate that required to in order to run the mining operation efficiently is also getting more and more. Uh, it requires you to the threshold is getting lower and lower, and the kind of professional staff required to operate to do 24 hours maintenance, to do monitoring, is also become the more onerous. And also, in addition, in the past 2 years, I'd say, especially after uh, the period of time where I think it was mid to late 2018, price was crashing, but hash rate kept climbing. It was a disaster time for miners. Um, so a lot of the key players in the mining space realized, okay, in order for mining game has profoundly changed. It's no longer the case that if you just throw money at it, you're gonna have massive upside. I think more financial instruments, more hedging instruments, and more financial activities are required in order for a mining operation to continue to be successful and profitable, because that margin is getting thinner and thinner.
Some say that hash rate is correlated to price. What are some of the unique things that you've seen or noticed that miners are doing to hedge and protect themselves when price separates itself from hash rate?
Yeah, so I think so intuitively, hash rate definitely should be related to price, right? The only reason people turn on the machines is because they're expecting they can make a profit, or at least because mining is a very, very profit-driven business. I think a lot of the conversation about around discussions on the internet around the ideology of mining is secondary. So however, mining is always playing catch up with price. That is because the speed of reaction, the hardware industry is much slower than financial industry, right? So with the financial industry, and I mean coin price, um, any changes in the market or any kind of sentiment updates that gets reflected in the price very quickly. But when that trickles to down to hash rate, it takes month or sorry, at least several weeks for miners to process the information, to place an order, to get a machine shipped, to get a machine set up. So that's why there's always a delay between price versus hash rate. So I think they're correlated, but they're correlated at different time scale.
Now, we're seeing all-time highs in BTC's hash rate. Um, do you think that that's healthy for the BTC ecosystem?
Yeah, so I think that depends on the definition of healthy. I think like all the organism that scale, it's inevitable to have this kind of pockets of blobs that just have natural advantage over some of the others in operating this kind of business. So the reason I think the more hash rate um, is not it's kind of hard to tell because more hash rate intuitively it should mean that the system is getting more and more expensive to attack, right? In order for you to initiate a 51% attack, you have to, whether you rent it or you put on new machines, the kind of capex is is much more significant than before. So on the whole, it seems like it's a beneficial thing, but individually for miner, it's always a competition. What your unit of hash rate is diminishing. Right? Every second that there's a new machine coming online, so that means it becomes more and more capital intensive. It requires more innovation around how you manage rewards. It requires more thinking around how you manage your expenses, your downside. So I think all these trends, the combination of these two trends means that miners can not just be a pure operator. They have to develop financial tools, whether it's a very simple form of collateralized lending, collateralize their coin to get fiat in order to get through that month payment, or some form of future. All these things need to be considered. So in short, overall for the holistic system, seems like this is a good thing. However, for individual miners, the operations get more complex.
Do you feel the mining machines will reach a power threshold? And if so, how do you feel that'll affect the ecosystem? Like, when does the physics kick in and just limit these machines?
Yeah, so right now the most advanced machines are using 7 nanometer, but even the 7 nanometer doesn't necessarily mean that these manufacturers have a very good grasp. And in fact, Whatsminer, which is the closest second competitor in machine spec, they're still using 10 nanometers from Samsung. So I think when it comes to consideration for the machine, you have to not only take into consideration of the back end, but also just a price and understanding of the back end associated with it. So I think we're entering into the territory where the incremental improvement on just the pure brute efficiency of the back end is getting slower and slower. 5 nanometer is going to require billions and billions of investment in a fab in order for it to become a usable commercial available product. But at the same time, 7 nanometer is also facing a lot of competition from other semiconductor industries. Sorry, other industries that require high-end semiconductor goods. For instance, like 5G cell phones or some of the AI ASICs. So it's going to that's going to reflect on the price for the manufacturer when they approach these fabs on to request 7 nanometer chips. So and obviously when that's also going to reflect in the price of the final OEM, the goods. Um, so I think right now we're going to see it slowing down, but not necessarily because it's approaching physical limitation. I mean, it is approaching physical limitation, but all these other economic factors are also in play as well.
Now, with these new instruments available for miners to hedge, do you think that this upcoming halving is going to look a little different than it has historically, where miners are not, I want to say, now obligated to sell because the dynamics of the whole ecosystem have shifted? What are your thoughts on that?
Yeah, so I think we're expecting a lot of S9s to retire. So I think the significance of this having is that prior to this having, a good number of miners were just simply long only, right? They turn on the machines and just expect to sit on the lawns. And this is because in the past, hash rate is still relatively has been at a relatively comfortable place and prices relatively high. And what miners could manage were just the expenses, right? The most important thing for them is to get their electricity price to as cheap as possible, and their upfront purchase cost with the manufacturer as cheap as possible. Um, so what if a sophisticated miner can get these to a reasonably low price, he or she should be fine for a long period of time, even running old gen machines. But for most miners who don't have access to dirt cheap electricity, or the most reasonable price when they purchase machines, this halving is going to be it will retire a good chunk of their machines. So we are expecting hash rate to drop after this, but I think this shouldn't be a surprise.
Now, with your direct connects to China, how serious is the COVID-19
Oh, it's
pandemic?
bad.
And yeah, to what degree, and how do you feel that it's affecting, I want to say, the crypto ecosystem and the mining ecosystem?
Well, so people are no longer going to conferences, which is good. I think most of these conferences are pure waste of time. So as for mining space, the manufacturing definitely slowed down. A lot of the new machines that are supposed to roll out the market in January, February, they are experiencing huge delays. I think only a week or 2 weeks ago, that was when a lot of these factories started working again. Um, so it's definitely a hit to hash rate growth, which is not necessarily a bad thing. And as for maintenance of the mining operations, some of the staffs are obviously they could not go to the site, which is pretty painful if you have maintenance requirements during that time. So overall, I think hash rate is during the period of time, hash rate is not being growing as fast as we previously anticipated.
Right. Circling back now to Decred, what attracted Iterative to get involved with DCR and DCR mining with so many other projects available?
So Decred is particularly interesting to us. Um, so like I mentioned before, proof of work is a very effective Sybil resistant mechanism that works well for this kind of asynchronous distributed system. And at the same time, it serves it provides a very strong what it means is it provides a very strong settlement assurance for this kind of decentralized network. And with each block, right, with more proof of work uh, being produced, that with a lack of a better word, the economic weights of the pre-order blocks also get stronger and stronger, and hence it's very good for building up machine consensus, right? But human memory is the opposite. Human memory it's particularly bad at uh, keeping consensus of things that happened a while ago. So in short, so proof of work is very good. Proof of work for machine consensus is very good at making older transactions strong. But human consensus, particularly because it's built on collective memory of things, is particularly weak when things are older. So I think proof of work is great to build the machine consensus, which is a foundation for any kind of a decentralized settlement network. But at the same time, we need something that can serve as a better distribution mechanism for human voting, or something that reflects human consensus. Because after all, these are open source projects, and after all, the direction that these projects take is based on group consensus to some extent. So, throughout all these centuries, voting is still the best way to establish human consensus. But as we've seen in many of the proof of stake projects or DPoS mostly, actually recently this whole CMIT and Tron scandal is a great example of that. Voting is terrible when if it's inherent to the machine consensus of this kind of system. So the question becomes, what is the best way to marry proof of work and proof of stake, or some kind of, by proof of stake I'm really meaning like some form of voting, that such that the machine consensus can benefit from the heaviness of proof of work, but at the same time the human agreements can reflect in more efficient manner rather than having miners dominated decisions. So we thought, Decred's structure is pretty clever, and we started looking more into it and realized, okay, there's definitely something there.
What are your thoughts on the hybrid consensus algorithm in comparison to the others, say like proof of work or proof of stake?
Yeah, so I think pure proof of work has been working pretty well so far, and but once it scales to this point, it's very obvious that a miner has a dominant influence over the direction of the network, right? So we call it the delicate balance of terror when in a network where miners are basically holding the network hostage. They can decide whether they can nuke the network or not, or they just fork away and create something, or just greatly weaken the existing network. So this is not an ideal situation, because even though when the miners agree, this network has very strong settlement assurance from machine consensus, but at the same time, it's very poor form of reflecting human consensus. If the devs and the miner have a disagreement, the miners just win. On the other hand, for pure proof of stake, first of all, they greatly weaken the machine consensus side, and in a system like that, also it's very very easy to have the kind of cultish developer following, right? Because they greatly influence the direction of the stake. We call it the tyranny of the structurelessness. So it's in a system that looks like there's no hierarchy, and everyone's equal and everyone's contributing to the system, more or less in the equal fashion. But within this kind of system, there are invisible hierarchy, there are invisible rules. So I think what Decred's hybrid design solves is that it offloads the machine consensus purely to proof of work, and the proof of stake lets the proof of stake layer to reflect the human consensus.
With all the advancements that Decred has going on, what are you most optimistic about, or what has you, I guess, the most excited that the project has recently released?
Yeah, so I think Decred is the closest thing we have to a potential of a real DAO. Because what it does is it standardizes collective decision making process, and I think it's huge, right? Because it's obvious that work is moving towards a more open source, more collaborative, and more digital fashion, but we don't really have a pure, like, digitally native. We don't have a native structure or decision making progress process for this type of organism. So there are a lot of companies that are built on open source, but the way that they structure themselves is still very traditional corporate fashion. And I think the traditional corporate, they work incredibly well post industrial revolution, and but with this something like this, the concept of distance, and therefore the concept of relation between each individual is different. So in order to have a very efficient way to structure around to organize around this kind of open source development process, we need something that's native to it. And that means the decision making process needs to be adjusted to reflect that kind of openness and transitivity. So I think DAO is important exactly in that manner. But obviously we've seen a lot of failure in DAO experiments. I think most of it is because a lot of them they miss the point. The reason I think Decred is the most promising is exactly because all the reason that I mentioned about the hybrid design.
Understood. What are your concerns, or what are some of the holes you see in the project, or weak points that could be attacked?
So I think the long term potential for Decred, and actually, the long term concern for any kind of cryptocurrency is although I hate to use this word, but there's some truth in it, is adoption. And at this point, I don't think anyone's worried about Bitcoin's adoption or its potential to become a global alternative financial system. But for something like Decred, which is much smaller, I think its advantage is that it has this kind of it can offer this kind of DAO-like system to better reflect the participants, or with a lack of a better word, communities' collective decision making. Um, so I think what would be interesting for Decred to scale is to offer to being able to make this uh, Politia instance more modular. So any kind of outside party or any kind of group, right? Any kind of project team, they can spin up a Politia instance and just and Decred will take care of the nasty stuff that's behind it. I think that would be a very good future for Decred to scale.
Yeah, I think that'd be a great addition. Leo, why do you think certain projects catch on in Asia more than others? You see like let me think of some like Ethereum is massive in Asia, or even EOS caught on. What do you think DCR could do to raise its awareness on that side of the world?
Yeah, I think Ethereum and EOS they caught on not just in Asia, but in a lot of places, especially among mediocre developers. Um, I think the attractiveness of a project like Ethereum that boasts on its flexibility and openness is that it's very easy to build something on it. But these applications or experiments, whether it's CryptoKitty or games or DeFi, they tap into they tap into non-existent demand. The demand is simply just not there, right? So the one metric that the people in those community like to talk about is just the number of developers working on that on that kind of platforms, but um, but these are not real developers. Not real developer. I mean, they're not protocol developers. They're not making the protocol stronger, and they're just leeches that build. These words are strong, but they're just building toys, right? They're just building toys. So I think it attracts people who want to just build something quick and dirty and easy. Um, but I think that doesn't change the fact that Ethereum or EOS are just going to become floating casinos on the internet.
If they aren't already. I
Yeah.
mean, so well, Leo, man, I appreciate you coming on the show. Do you have any closing thoughts and message to the DCR community, who I'm sure are looking forward to this?
Yeah. So I think I think Decred is a very complicated project, and its story is very hard to tell. But I think more thoughtful people are starting to discuss it, and certainly gaining you know attraction on social media. So I think the long term, the most important thing with Decred is understanding what it really is, right? Because it is kind of a hippie project. It's trying to standardize human decision making progress. It's like a commune, um, and and exactly because of that, I think the progress it takes the time it takes to achieve adoption is going to be slower. Um, but that is not a natural disadvantage of this project. It simply means that the goal is trying to solve is more complicated.
Well, thank you for coming on the show, Leo. I appreciate you.
Thanks for having me.